and welcome to the Small Business Tax Savings Podcast, powered by JETRO and Associates. Get ready for another action-packed episode from our team that will help you save time, taxes, and keep more money in your pocket.
Hello, listeners, and thanks for tuning in for another episode of the Small Business Tax Savings Podcast. My name is Mike Jesowshek. I'm a CPA and founder over at JETRO and Associates. And today we're just going to continue that discussion of year-end items that we want to consider for S-Corporation owners. Today's discussion is going to be on retirement accounts, again, for S-Corporations. And really, the two main retirement type accounts that we discuss for just solo S-Corp owners is the SEP IRA or the solo 401k. So I'm going to talk about two things that we need to consider as we are coming up on the year end for both of those accounts. With the SEP IRA, you are able to contribute up to 25% of your salary with a maximum of $55,000. That goes up, just so you know, to $56,000 in 2019. Now, you must deposit the contributions by the due date of filing your tax return for that year, and that includes extensions. So if you obtain an extension for filing your return, you have until the end of that extension period to deposit the contribution regardless of when you actually file the return. So you can make contributions after year end here. If you did not request an extension to file your tax return and did not deposit the contributions by the filing date of your original return, you are not allowed to deduct the SEP plan contributions for that year, and those contributions would just be moved over to the next year's return. So as an example, let's assume you take a wage of $80,000. You would be able to contribute to a SEP IRA a maximum of $20,000, which would be 25% of that $80,000. You can make the contributions anytime before the due date of filing your tax return. So if you happen to be short on cash today, you can still make contribution in February in February of 2019 for your 2018 taxes. So that's the nice thing about the SEP is you can make those contributions later on. Now let's move over to the solo 401k. The big thing about the solo 401k is that it must be adopted by 12/31. If it is established after year end, you cannot make any 2018 contributions. That would be then considered a 2019 solo 401k. As with the SEP IRA, the actual employee and employer contributions can be made up until the company's tax return deadline, including any extensions. So very similar way as far as the contributions go for the SEP, same thing with the solo. So although the plan has to be open before year end, the contributions can still be made at a later date. Now, with the solo 401k, the maximum contributions on the employee side, so you as the employee, is $18,500, and it is not restricted to a percentage. You just have to make that amount. So the max is $18,500, not restricted to a percentage. Now, the employer can contribute or contribute to that solo 401k, and the maximum contribution from the employer side is 25% of wages. So again, as an employee, you can contribute up to $18,500, and then as the employer, they can do a maximum contribution of 25% of that salary. So let's assume you have that same wage of $80,000. You would be able to contribute as an employee up to $18,500 of that to a solo 401k, and then your company, as the employer, can contribute up to an additional 25%, which would be $20,000. So in that scenario, you would have a total of $38,500 in that 401k contribution. $18,500 coming from you as an employee and $20,000 coming from the employer. Now it's important to note that you have to include this activity with the solo 401k on your W-2. So if you do make any kind of transactions like this, be sure to talk to your payroll provider when you decide on the contribution amounts. So again, today we talked about the SEP IRA, the solo 401k for S-Corporation owners. If you're operating as a sole proprietor, things like that, some of these items might change. So just reach out to your tax professional to discuss those specific situations. But we did talk about S-Corporations. And again, the SEP IRA, you can make contributions up until the tax filing deadline for your business tax return, and you can contribute up to 25% of the salary with a max of $55,000. The solo 401k must be adopted by year end, and contributions, however, can still be made in the prior year at a later date again, before that tax return filing deadline, including any extensions. The maximum contribution on the employee side of a solo 401k is $18,500, and then the employer can contribute a maximum of 25% of wages. Again, guys, thanks for tuning in. This is the retirement things that we need to consider before year end on the retirement side. Tune in next week as we finalize and finish up 2018 with another episode.
This has been another episode of the Small Business Tax Savings Podcast from the team at JETRO and Associates. If you have any questions, feel free to email them. tax@jetrotax.com. We have packages for small business owners starting at just $75 a month. If you enjoyed our podcast, please take the time out to give us a 5-star review in iTunes or wherever you listen. This helps us to bring you useful tips to help you grow your small business. Thanks for listening and have a great day.